Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Now that we've explored the early warning signs, this video breaks down specific red flags in cannabis stocks, from unreliable financials to unstable market regulations, that can turn potential profits into costly mistakes. Foreign operators facing local legal walls. A highly specific risk involves investing in large, established multi-state operators or international cannabis conglomerates that place a large strategic bet on a single, slow-moving foreign country. If 30% or more of a foreign company's future revenue relies on one stubborn government finally opening its doors, that stock is highly precarious. If the local government continues to drag its feet, that operator is stuck paying overhead in a market without sales. The stock price of the foreign operator will suffer disproportionately from news about political setbacks in that specific country. Global reach does not guarantee safety. It can sometimes multiply exposure to political risk. Before buying, key warning signs in high-risk cannabis companies. It is not enough to simply avoid certain countries. Investors must also examine the financial stability of the companies operating in those difficult environments. A struggling company in a stagnant market exhibits clear, definable warning signs that smart investors look for. Checking the books. The problem with too much debt. Companies stuck waiting for regulatory changes often have to borrow heavily just to cover their operating expenses. They aren't funding expansion, they are funding survival. When reviewing a stock, look closely at their balance sheet and the amount of long-term debt. High debt combined with poor or zero revenue growth from stalled markets creates a ticking clock. Eventually, interest and principal payments become unsustainable, driving the company toward massive stock dilution, issuing more shares to raise quick funds, or worse, bankruptcy. A cannabis company with substantial borrowing and uncertain markets is like a person trying to swim while wearing concrete shoes. They won't last long, regardless of how strong they were initially. Avoid companies that are clearly using debt to bridge a gap caused by political stagnation. Warning sign. What it means for investors. High debt-to-equity ratio. Company relies more on borrowing than investment, high bankruptcy risk. Negative free cash flow. Company burns more cash than it brings in, unsustainable without more borrowing. Consistent equity dilution. Issuing new shares reduces the value of existing shares to cover costs. Sales are flat. When companies cannot grow due to laws. The ultimate indicator of a poor investment in a slow market is the company's revenue growth. If the government restricts the company's ability to sell, the revenue streams will dry up or fail to expand. When reviewing quarterly reports, check for flat or slightly decreasing sales figures. If a company operating in a market with perpetually slow laws shows little sales growth quarter after quarter, it signals that their hands are tied tightly by legislative bottlenecks. Flat revenue means a flat or falling stock price because the company is failing to capture the promised market potential. Truly successful cannabis investments show rapidly increasing revenue from functioning, expanding legal markets. Focus your attention there instead. The excitement surrounding the cannabis sector in this video must be tempered by political reality. Investment success hinges not on the promise of a market, but on the stability and speed of existing legal frameworks. Slow governments create toxic conditions for the companies operating within their borders, resulting in perpetually high costs, high debt, and little revenue growth. To protect your capital, stay away from stocks heavily dependent on countries that specialize in policy gridlock. Instead, focus on companies already flourishing in markets that are running smoothly and expanding rapidly. Strategic caution today prevents significant losses tomorrow. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.